Welcome to ShortView Trading. It's your morning market hit for Monday, January the 18th. What matters today and this week for traders? Well, the price action in markets on Friday in the last few trading sessions has been utterly fascinating. And indeed, there seems to be a clear pattern emerging that we've been writing about in the Daily Rag over the course of this past week that we publish on our website every day. And that pattern can be summarized as follows. It probably really started with the dollar, which hit a major low after selling off for most of the second half of last year on the 5th of January. Early on in this year, and since then it's been engaged in a counter trend dollar rally that you can see in the chart in front of you now. And with that, that's an indication of slight tightening of liquidity, and we saw very highly speculative assets, volatile assets, speculative liquidity indicators like Tesla and Bitcoin, as you see in the chart in front of you now, topping out near term on the 8th of January and broadly sort of trending sideways, giving back some of those gains. So liquidity is tightening a bit, dollars rallying a bit, bond yields are topping out. Of course, they've been backing up hard over recent weeks and months. But as of the beginning of last week, we saw a topping out in the yield process, a troughing in the price, if you like. And on top of that, some stalling out of sector leadership. Cyclicals have been the leadership in recent weeks and months. They've been topping out and stalling in the last few days. And then looking broader, further afield, we see the S&P 500 picking all this up. Having consolidated its gains for several days, it's now started to roll over, as you can see in the chart in front of you now. So that really leads to the real key question here. Is this a 1 to 2 day wobble in the S&P 500, or is this the start of something more sinister? One of the sort of more meaningful pullbacks like we saw in September and October last year. And in that respect, the models are pretty interesting. The risk appetite scoring system has been rolling over, and as you can see from the chart in front of you now, it's kind of mid-range. This is a good measure of how greedy or fearful the market is. It was extremely greedy about a week ago, and now it's working its way lower towards the sort of fearful level, the buy level. And of course, as we like to say, you've got to move against the sentiment of the market. You've got to be greedy when people are fearful and fearful when they're greedy. And then added to that, if we look at a lot of our hedging models, a lot of them are still pretty much on sell. The CBOE put to call ratios are pretty high levels, pretty much at its sell level. And the amount of speculative call options out there remains very high. In other words, the speculation hasn't come out of the market in the near term. It's very high. And you can see over recent months, that's typically a reasonably good sell signal. So for the full analysis of how we're playing this market, our equity index futures recommendation, and an update on all the models, please see today's Daily Rag available to subscribers via the website. So what are we watching this week? Well, there really are quite a lot of key themes. There's a housing theme in the States with a bunch of housing data, including the NAHB Housing Market Index out later this week. There's the Biden inauguration and then likely executive orders as he tries to reverse much of Trump's policies and bring other policies to bear. Then added to that, we've got flash PMIs across the globe. These are the sort of first take of economic activity in the month to date so far. And then we've got a couple of central bank meetings, including the ECB and the Bank of Japan. Added to which there's, of course, a continuation of the US fourth quarter earnings season. It kicked off on earnest last Friday with 3 of the big banks. There's more banks this week amongst a whole raft of key S&P 500 companies. So that's it from us. That's your morning market hit for Monday, 18th of January. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe. Trade well.